absorb some content from you. And so this will be great. Hey, Roger Scott has just joined us. Hey, Roger,
Good
how are you
morning.
doing?
I'm doing great. Thank you for having me.
Hey,
Good,
Roger.
good.
My mother told me over to watch a person with two first names, but I think I'll make an exception for you, Roger.
Well, thank you.
Yeah, I bet you've heard that before. That's good. Well, we're really excited to get started here with you today on Ask the Pros. I've got a lot of great content because a lot of things are going on in the market. And as you can see, there's risk in the market. You know it, I know it. And that's why we come back week after week. We talk about the market. We talk about the things that are going, we make no ways that we're looking at the market, strategies that we like in with the attempt to
Whoops.
Let me turn off my video, see if that helps. Does that help?
So far, yeah.
Okay, getting choppy. Yeah, I don't know what's going on with my internet today. So it must have something to do with that thing in Colorado as well.
Okay.
Make sure you understand whatever you're trading before you ever click that mouse, because your money is at risk, and we don't want you to lose it. We don't like losing it, and but you can lose it. So make sure that you are protecting it and know what you're doing before you click that mouse. So because, a lot of things going on in the markets. I mean, we know, war has broken out. We're fully aware of that. U.S. getting involved maybe a little bit more than they have with Ukraine and Russia. We've got consumers spending like crazy, right? I mean, do they know what's going on in the world? I don't know. And then how about the extreme fear factors showing up on CNN's Fear and Greed website? So a lot there to talk about. So let's get started talking about it. Want to introduce you all to Norman Hallett. So glad that Norman is here with us. He not only has a ton of experience, but he is very disciplined. He comes from Disciplined Trader. Want him to tell us a little bit more about that. And but with his wealth of experience and knowledge trading just a whole variety of markets, you're going to really enjoy hearing from him today. So I'm going to go ahead and stop the share. And let's get going. Let's start asking some questions here. So with everything that's going on in the markets right now, so how are you approaching it? How are you looking at it? And Norman, let's go ahead and start with you. And as you answer that question, Norman, how you're approaching the market today, tell us, a little bit more about you and how you came to this approach to the market today.
Getting to know you, getting to know all about you. Sing it with me, Roger. I listen. For the last 20 years, when I first started the Disciplined Trader, I've been in this 4 decades, and having run one of the largest option firms in the country in the 80s, and being a commodity trading advisor, just being around people who are trading and then helping others to trade. It was the mental part that was the real issue. There's a lot of good trading plans out there. They're okay, they're good, they're great. They'll all make money if you can stick with them. But the real issue was the sticking with it. And so for the last really first 15 out of the last 20 years, I concentrated on helping traders with the mental and emotional part, which kind of brings me to your question about what's going on in the with all these things going on. The great thing about technical analysis is that you don't have to worry about any of that stuff, except for maybe one little thing, and I'll tell you one little thing in a second. It's all in the price of the, hey Jack, it's all in the price of the of whatever you're trading. Say it's a in the S&P or the Dow, whatever you trade. I tend more toward the futures market, but it's all in the price. What has been reported and what is perceived to be what's going to happen, say in the next 6 weeks or 6 months. Jack and I have talked about this in the past. About used to be 6 months, now it's about 6 hours or 6 days. The current price is, so it's all in the price. So I don't worry much about what's going on in the news, except for to understand that it's already in the technical analysis that I'm doing. I mean, I may have my opinions. The only one little factor that I may make, believing, for instance, right now that we're looking at more of a southerly movement in the indices, I may favor that from a position sizing standpoint, not in whether I take a direction. You can make some good money countering some of the major moves, but I make the differentiation in the number of contracts I take. favoring a particular position from a longer term chart. So that's the only caveat to don't worry about the news, you know.
Excellent. That's really good. Position sizing, taking that into account, puts less capital at risk in crazy times. So that was really great insight. Looking forward to hearing some more, Norman. So Jack, let's jump in with you. We hear you're there still in Colorado where the air is thin. So, but we're glad that you're here with us. And hopefully you can hear me okay. My mic's not too crazy. But the question, Jack, is how do we approach the market today and next week based on, we've got war news, we've got consumers that are spending like crazy. I mean, just a schizophrenic type of world out there right now.
Yeah, it is schizophrenic. That's a great way to put it. The economy comes in, consumers are doing great, and the market wants to tank on that because they think Powell's going to keep hiking rates. It's just ironic that when you get good news, it's bad news right now. And we see a lot of overreaction to earnings and things like that. But I never really changed my game plan. I let the market change my game plan because I always use a market-driven approach. So for me, it's very, very, very simple. I look at all three major market indexes, SPY, DIA, and QQQ. I look at where are those in their trend, and I use some kind of trend point software. And if that index is below all three or 2 out of 3 of those trend points, I'm going to take a bullish type trade. So for example, this week I saw Amazon was more bearish, and I set up a credit spread on Amazon around 140 some dollars, 140, 145. I don't think Amazon can get to that price by the market's close today. So it's real simple for me. I use the same strategy. I just flip it and base it on the broad market's direction. But I don't really pay a lot of attention to news because this kind of news, it's just out of the blue kind of news. The Hamas thing, that no one really saw that coming. Now I'm reading about Syria's getting blown up, and nobody sees that kind of stuff coming. And the market overreacts to news all the time, whether it's earnings. We saw that with Microsoft overreaction on the upside, Google overreaction on the downside. And anytime there's some kind of surprise event like a war type thing, it just rattles the markets. But the one thing about all this kind of news is we've already been in a bearish trend, and everybody, including myself, is looking for a little rebound before the end of the year. But I take it on a day-to-day basis, and right now it's bearish. And so I'm planning on my income style trades bearish. Again, I'm going to use a stock like Amazon as an asset to create an income trade. I'm not taking any directional stock trades right now.
Nice. That's good to know. That's good to hear. I like what you said, that day-to-day basis. And I want to come back. We'll talk a little bit more about that day-to-day basis, some tips that might help traders out there as well. So Roger, happy birthday.
Thank you. Thank you.
So
Happy birthday, my man.
Thank you. Hey, Jack, how are you? How you doing today? Good to see you.
Good. So Roger, what are your thoughts on, how traders could approach the market today and next week?
Very, very carefully. Very, very carefully. They need to tread very carefully because the markets right now are looking for directional bias, and there's still a huge dislocation, I would say, between what the Fed is doing and what the bond market is doing. We have the war in the Middle East. We have the Ukraine situation. We have a potential government shutdown in a few days. I mean, there's a lot of things on the table here. There is absolutely no clear bias right now. You could put 100 people in the room and 50 will tell you the market's going up, 50 will tell you the market's going down. What I can say is we're trading right now on the SPY. We're trading at the 200-day moving average, or near the 200-day moving average. And that's a very, very important level. And if we break that level, we can be in big doo-doo for quite a while. So we have to be extremely cautious right now. Also, markets are not responding. Earnings are, so far, the FANG stocks, have, aside from Amazon, and even Amazon, the market today is not really flying away. As you could see, it's up 0.15% right now. there's a lot of nervousness right now, and partly because next quarter was supposed to be the first quarter that earnings were supposed to start coming up. Well, I'm not seeing that. Matter of fact, if you heard what I think it was Meta, no, it was Google. Google that said it. It was either Meta or Google. Doesn't really matter because the result is the same. But they both said that macroeconomic events are going to be a huge, huge factor next year for us because that's how we make money, revenue from advertising. And both Meta and Google are in the same boat. And even Microsoft. Microsoft rallied right after news, and then the next day it erased all of it. So I'm not seeing the big FANG stocks, the big AI stocks, if you know, the name that started last year, AI stocks. I mean, they're still the same tech stocks they've been for the last 30 years. But I'm not really seeing the FANG stocks take off like they did the last couple of quarters. And I warned everybody about it when that whole AI rally was going on and NVIDIA was making a new high every day, that this is just not sustainable, especially in this kind of market environment. Now, estimates are a lot richer than they were a year ago or even 6 months ago, and the companies are just not impressing investors at all. And if we can't get the market to rally on the FANG stocks, my question to you is, what's next? They're not rallying on energy stocks. They're not rallying on healthcare stocks. Matter of fact, last I checked, the only sector that was positive today on a weekly basis, looking at technicals, was utilities. Yes. That's not good. That's very, very defensive. And also, you guys know I'm huge on my sector watch. I've never seen sectors mixed up as much as they are right now. It's like somebody took the sectors, put them in a bag, and just went like this with them and bunched them up. I mean, you got utilities going against tech. You got healthcare going against energies. I mean, everything is completely out of whack right now. So sometimes the best thing to do is to say the markets have absolutely no directional bias. Now, I know that's not what what the people watching this want to hear. They want answers from us. But the answer is, it's very hard to determine directional bias right now, especially with the market sitting right at the 200-day moving average. I mean, look at Tesla. Look at Apple. Apple is breaking down multi-year levels right now. I'm not seeing rainbows, crickets, and butterflies at the end of this rainbow here. You know what I mean? I'm not seeing anything great. I'd love to tell you I am, but I'm not. And again, what is going to drive this market higher after earnings, after the FANG earnings are out? What's going to happen next week and the week after when you have smaller companies that can't do well? Real estate is not doing well. Banks are not doing well. Jamie Dimon this morning started selling off his shares. So I would be very, very cautious right now. I would be extremely cautious right now. Sometimes it's best to stay out of the market or to be very nimble, like we've been doing with our day trades. But you don't want to make long-term commitments right now because you're going to be burning yourself. And that's the advice I would give my mother if she asked me the same question.
Yeah, good. Well, keep going with that, Roger, because that day-to-day trading that we were just talking about, that day-to-day basis. And I know you have been doing a lot of that in your trade room. You just started that and timing was perfect, right? Tell us about your experience there. Like specifically, like I know you're making a lot of money and their traders are making money. It's very short term. Tell us about that short term. Tell us what you're noticing about traders who are taking advantage of this style of trading that you're offering right now.
Well, the first thing that I realized is most traders have absolutely I'll tell you a couple of things, Celeste. It's kind of scary. Most traders have absolutely no idea how to select options. They have no idea how to select options. They're very bad at selecting the right option for the right tool. I'm seeing traders. I know someone who I gave them a day trade the other day. They bought an option that expires in 3 weeks. What the hell are you doing with a 3-week option for a day trade? I mean, your gamma is going to be like, your implied volatility is going to, anyway, I can go on and on, but it's not going to, this is no good. So the first thing I'm going to do is I'm going to teach people how to select the right option to do this, because a lot of folks can't afford shorting $500 stocks, $1,000 stocks. It makes perfect sense. I understand it. And we're not really scalping. I mean, we are with losers, but not with our winners. So you can be in a trade for an hour, 2-3 hours. It's not like minute by minute trades. And that means you could still profit from the option. But again, I have to teach them how to select the right options, which options not to trade, how to navigate their way, and it's all being very difficult. But the biggest problem I'm seeing is traders are having a very difficult time selecting the right option for the trade. And that's something we have to work on in the next couple of weeks. Because I know a lot of guys who just missed 80% of the trades. They took the trades that they could afford, and they didn't, you got to take them all or you take them none. You can't just choose and pick the best ones. So it's frustrating, but that's something we have to deal with, and we have to focus on that. Another thing we have to deal with is folks have to understand what tools work intraday and what tools do not work intraday. For example, all the stuff for long-term investment does not work intraday. You're using very different tools. It's very price-based. We have very intuitive tools that will make it easy for them. And matter of fact, I'm going to show you some of them right now. Let me just share my screen here. Right there. You guys can see my screen, right? My mouse going around here?
Yes.
Moving?
Yep.
Yeah. Okay. Let me just show you real quick. So this is part right here. If you could see this right here, this is let me just put on a different stock. Let me put on Ford, for example. We're short Ford right now. So this is an indicator. This is a very cool indicator. You can't buy this off the rack. This is called volatility adjusted relative strength. This compares the SPY intraday on an ATR adjusted basis with every stock that we're looking at. And this tells you if the SPY is stronger or if the stock is stronger. So if you're looking to go short, you would want to short stocks that have a lot of red here. If you'd want to go long, you would want to go with stocks that have a lot of green here, like Amazon, for example. So the indicator calculates the first half hour of the trading day and uses that as a breakout level. So it's a range breakout, first 30 minutes. Once it gets past the level, it automatically draws these profit targets for you. First level, second level, also based on the first half hour range. So all price movement and all of the indicator is based on the actual movement of the underlying asset. And the relative strength is comparing the stock to the S&P on an ATR adjusted basis. Nobody else is doing that. You can find regular comparative relative strength, but you can't find one that's adjusted to the S&P on a volatility basis. Why would we do that? Well, do you think Google and a utility stock is going to move with the same level of volatility if you want to compare them to each other? Of course not. So that's the reason why you got to take volatility to adjust into account when you're comparing S&P stocks. So very, very simply, we have a scanner right here. And this shows you relative strength or relative weakness on a 30-minute basis on a volatility adjusted. This shows you the strength. So we only look at stocks that are trading above yesterday's high. And here we look at stocks trading below yesterday's low. If they're trading within yesterday's high or yesterday's low, I don't care about those. So we would scan them. And then let's say the market right now is getting ready to drop as I'm looking at the S&P right now. Well, we would want to find the weakest stocks over the last 30 minutes in the S&P 500. So these are it. So let's say AbbVie, for example. All right. AbbVie's been the weakest stock in the S&P 500 over the last half hour. So we would take that, we would use that tool, and we would go right here. We would look at AbbVie, and you could see right now, look at it over the last half hour. Now, what happens? What do you think will happen if the S&P drops right now to AbbVie? It's all red. It's the weakest stock in the S&P to the market. It would go down, of course. So it's a really good way to utilize relative strength intraday, and we pretty much are doing that all day long. We have our profit targets, we have our levels here, and we have our relative strength. So we're using price action, and all our indicators have been created by price action. And again, notice it hasn't dropped here yet. If it hits this line, you'll start seeing the two red lines here, the profit targets. And if it was, for example, turn around and hit this level right now, you would see two green bars, and those would be your profit targets. Right now, it's intraday, and it hasn't hit one or two levels yet, but it's on our watch list because, as I said, it is the weakest stock in the S&P. Now, let's say I'm thinking that the S&P is going to turn around right now and start rallying and making. I don't, but hypothetically speaking, I would look at the strongest stock in the S&P over the last 30 minutes. And that happens to be SWK, Meta's there, NEM is there. These are very strong stocks that have completely bucked the downtrend in the market over the last 45 minutes. Thank you, RV, for saying that. I will, but let me just show them this. Just sold for 17% profit. All right, I'll show them. So CVX was one of the weakest stocks about an hour ago when I was in the VIP room. We had a trade on it. I put on CVX right here. The indicator came on, gave us right here, and here's another profit target on CVX right here. It just hit it a minute ago. So my traders would go short CVX right now. Here's your first profit target. Here's your second profit target. Is it weak to the market right now? A little bit. I'd like to see more of this. And I'd like to see volume. Volume is good. It's 136% of the average volume. This doesn't use average volume like every other indicator. Why? Because your volume at 8:30, at 9:30 in the morning is not going to be the same as at noon. Somebody forgot to tell traders that. So this uses the bar that you're using, whatever bar, 5-minute bar, 30-minute bar, hourly bar, and it compares it to that bar going back 20 days. So if I'm looking at 9:30 in the morning, I want to know if volume is higher at 9:30 in the morning, 20 days back, not how it was at 12 at lunchtime, because you can't compare that. That ship don't fly. So this is designed very much. This is the most, in my opinion, and based on the feedback that I've been getting over the last month, this is the best indicator for intraday and short-term swing trading. It goes all the way from 3 minutes to daily charts, and you could see very quickly your volume on a relative strength or weakness. You could see comparative basis right here. Right here, you could see that on a 5-minute, 15-minute, 30-minute, hourly, the volume is above average. You could see that the volume is 137% compared to yesterday's bar, and it's only 12:21. We still have 3.5 hours. And you could see that the 15-minute, the 30-minute, hourly, and daily are all relatively weak to the market, which makes this a perfect trade to short right now with your profit targets right here. And as long as this stays red, that means the stock is underperforming the S&P 500, and that's where you want to be. Gary says about a 90% win rate on daily trades. That's right, Gary. We've been having about a 90% win rate. Yeah, we've been day trading with about a 93% win rate in the last month over 130 trades. Excellent. So this indicator, I've been working on this 4 months straight. It's about 1,500 lines of code. It's not one of those wimpy 3-line indicators. This is my life's work. As you guys could see, I've put a lot of effort into this. I wanted to show you guys how I actually trade myself intuitively. So I put the tools together to make it available for you. And this is it. It's going to be available next Monday. On my my birthday's on Sunday. It's going to be available day after my birthday.
Love it.
Perfect.
And I'll have sessions to show you guys how to use this and all that. But this is a serious tool. This is not some monkey business. This is the real deal.
That's cool. Very cool. Well, that's beautiful. Thanks for sharing that, Roger.
Yeah.
It gave us a really great look, and people just have a lot of really positive comments of the experience they've had with you trading that here recently. So look for that on Monday. Everybody, happy November. So, hey, Norman, I want to switch over to you because you trade stocks and you trade options and you trade futures, a lot, and you have a lot of experience in the futures. And one thing like Roger was talking about, people don't know how to pick options, but that's like one of the nice things about futures is you don't always have to pick options, but they are very tricky, and it's not for the faint at heart, right? So tell us about your experience trading the futures market, and because it's available pretty much 24 hours. So even when Hamas was making the attacks, we were able to log on to the futures market Sunday night, find out what the impact was, and so on and so forth. But tell us about that futures market and what you find valuable about the futures market in times like these, and maybe ways, in your opinion, that traders could approach the futures market.
I appreciate that intro to the futures market. I've because I come from the area of realizing that most traders have a basic understanding of what's going on, but they can't seem to stick with it. So when I build trading plans, or when I teach traders about look, they're in a room themselves usually. It's just them and the computer. Generally, they're going to be affected by pretty much everything they see. Too many indicators to traders can give them reasons not to be cautious in their trading plan, or to not to take a trade, or be too cautious or too aggressive. I find the simplicity in trading makes a lot of sense, and I believe that probably, Scott alluded to the confusion of what a premium price does in options. I was in the option business for exclusively for about 6 or 7 years, and the main issue was, what's going on with this premium price? Why is the market going up and nothing's happening to my premium? And actually, if you look at yeah, if you look at Jack's work, Jack takes advantage of taking in some of that premium and defending it with owning the stock underneath, or vice versa. So everybody's got a plan to figure out, or to not to have to put their finger on what's going on with the premium price, because it's an elusive thing. With futures, it's very, very easy. For instance, in a gold contract, there's 100 ounces. If you buy a gold contract and it moves up $1, you made $100. If it moves down $1, you lost $100. I actually think that the futures market is a great place for speculative traders to actually start. And I couldn't have said that 5 or 6 years ago, but now they have micro contracts where instead of $100 each way, you're talking about $10 each way in a micro contract. Well, that's a manageable risk environment for new traders. Now you got to understand your trading plan. You've got to test it, and then you've got to then you can go for it in a very limited way with your trading plan. But it becomes easy to follow when you can be on top of the values that you're dealing with. There's a lot of, in the major markets, the indices, the markets, and so on. Even the softs now, sugar and cocoa, and the things that I haven't really traded in a while, but they have their time, usually in this summer sometime, where the grains, the Midwest heats up. But you don't have to do any of that. Well, you can take a look at some of the factors that we're talking about and trade the indices. They're giving very clear signals, and I think it's a way to utilize, and for day traders to take a look at some of the long-term charts. Let me quickly share my screen just to show you what I'm talking about, and you'll see the simplicity of the way I look at things. This is actually the board that I look for, but here's the S&P 500, and you can see that. I'm just going to reduce this here. You can see that I don't have a whole lot of action on I have the RSI down here. I've got a couple of moving averages. I like the 8 exponential moving average because I always considered it the holy grail of moving averages. I hate that word, but it's a major average that I tend to think I see markets riding one side or another of that 8. And then I've always got the 34 in there. It's a Fibonacci number. I won't go through the value of that except for those that know the value of the Fibonacci numbers. But it's easy to take a look at a chart like this and say, hey, the bias is on the downside here. And therefore, when I go to a more a day trader's chart, we're looking at, say, the 5-minute, which is something that I like to trade. You can see that the market is following through on that bias, and you can adjust your position sizing to only taking short trades. In fact, this particular signal right here, where you have hesitation and then a move downward through the 8-bar exponential moving average, that's one of our loaded gun signals. And you can see right here led to a nice down move. Right here, again, here is one where we're looking to the upside. That was a failure. But here's, you reverse right here, and it can lead to here. So for me, you have to be willing to take some losses along the way in order to be there for some of these moves. Here's, don't see any other, here's another type signal where you have small bodies compared to a big movement, and you see some follow through here. I'm a big proponent of supports and resistance. I think people, new traders, tend to forget about it. They're looking for a move like this to take out highs and so on, but it's going to get resistant. What used to be the lower high is now a resistance area, and certainly shown its value here. So I'm a guy that uses simple charts, and I'm willing to take small losses. In a case like this, the loss would have been right above this trigger area here. If it was a loser, it would be right here. So I'm always measuring the loss potential, making that okay with me. And then, but I want to be there for the big moves, and you can do that too. There's other techniques that I like to talk about, but to directly answer your question, the idea of knowing where you are at all times is that clarity can help somebody to understand the process, and the process of futures trading is watch your risk, let something run, defend your gains, and so on. So that's the way I look at the market. It's been very successful for me and the people that I guide. I'm not looking for every trade to be a winner, but I want to be there for in a tested way. I want to be there for what are potential runs. And
got a quick question for you.
Sure.
Bring that chart back up if you could. I don't mean to interrupt you, but everybody sees something different in a chart. Mm-hmm. And I want to I want to get your opinion on something, and then I'll tell you mine. Now, okay. When I look at this, obviously it's bearish, but what else I see dramatically is the price elasticity of those bars. Look on the far left. That's nothing. Yeah. Even further left, that intraday elasticity is nothing. Now go over to the right.
Yeah.
That's going to push any price higher, right? Look at that. That price elasticity, that's volatility right there, my man. What do you make of the difference in the size of those bars?
Well, they don't, I hear you. And to me, it spells opportunity. Just like, any trader that's been around, that they're not afraid of the volatility. What it tells me is that, I have of course, a risk parameter that I'm not willing to break. If these bars spell too much risk, I'm out of the trade. Either that, or I wait for a backup in the situation without breaking the pattern. But to me, again, it's a matter of position sizing. I like to take anywhere from 2 to 6 positions when I take on a day trading position. When I have something like this, maybe a 2 or a 3. Why? Because we're in the air here. We're reversing. This is a resistance point. The 34. I find it can be a barrier to coming up, as opposed to anything on the way up. It's a barrier on a long trade. If you're above it, then it's a backstop. So I'd be very cautious here, and I may take one. But as I move through here, this is another, the thing is that you may fear, you may stay out of a trade like this. But if I have to go to micros, which again is a beautiful part of the futures market, you can get very small in your approach. But I want to be in this. I want to be in this, but look at see this measure, see this body right here? What I do is I measure the body, and I extend that measurement down here to where I'm going to take my limit buy on half of my positions. And you can see that it coincides with what's going to be a support level here. So kind of like taking some of my trades out here, which would have been the case, and then leaving the other position or positions. I would have a stop at break even. Now that I've captured what I wanted from a grab the low-hanging fruit standpoint and going further. And you can see again with my love for support and resistance. I think any trader knows how to honor that. You can see where it at least checks it here. And if it results in a double bottom, we may get another big bar. But the direct answer to your question is, when you get increased volatility like this, you can actually write options against some of these movements also, but sticking to just having your opportunity within the futures trading arena, you just reduce your position size. And if reducing your position size is not good enough, go to a smaller contract so that you can. I like peeling on and off as trades develop. This way I can capture the low-hanging fruit as it goes along. Because really, one of the big things, Jack, and I think we've talked about this before, one of the big mental issues with traders is that when they have a move that starts to happen in their favor, and they're not, they're thinking, should I just take what God's giving me here, or should I could this be the big one? That dilemma is a dilemma that really hurts a lot of traders, because you're in nowhere land, and unless you have made your decisions on what you want to do before you start trading and stick to it, that moment in time is a bad moment in time. This is why I like to take at least 2 positions on everything that I take, because I can treat one as the low-hanging fruit and I can treat the other as the runner. This to me eliminates what I consider one of the top, what I know from having worked with traders on their mental and emotional issues, I know is one of the real dilemmas that traders have. Oh, I let it go because I thought it was going and it broke even and I had a big, I should have taken that money. Well, take half, put your stop at break even. So if you get stopped out, you're leaving with money. And if it goes, you defend that in a different way all the way down in a short trade. So yeah, it's a good question, Jack. And really, I think traders who do everything, who do some options, who do some stocks, who do some with volatility like this, I think you got to look at what you do also, Jack, because there's so much opportunity in writing, especially when you're near a support or resistance, to take some of that juice and and just put it in your pocket, as you do with writing options. So I know where that question came from. I know why you asked that question, Jack.
Well, hey, sure that the audience understands is that picture that you had up there, Norman, was a 5-minute chart of the futures market. When those bars were really small, that was like at 12 o'clock in the morning, or the morning, exactly. And when most people are asleep. And it's very typical in the futures market that there is that those tight bars, that volatility, that extreme volatility. That's not a daily chart. That's a 5-minute chart on the futures market that's open 24 hours. So, but I wanted to point out too, a couple of things, and then we'll hear your comments, but a couple of things people were saying in the chat, which is so very true. The fact that trading the futures doesn't have the day trading. There are a lot of but that's a really cool thing about that futures market. And then being able to, as you were saying, having a lot of variety on the options for that as well. But so what, let's move on. Do you have with this market, you steadily are pulling the profits out. You pointed out some things there on that chart, which was actually very interesting. What are some ways that traders can use the kind of volatility that you were just talking about to be on the right side of the market? What are some practical steps?
I missed that question. Was that for me or for Roger?
That was for you, Jack.
Yeah. No, the volatility, like when I looked at that chart and I see those little bars, it doesn't even matter to me what time of day. That's you could take a position in that, but that's all you could do with that. Yeah. But when I see that price elasticity, the length in that bar getting bigger and bigger and bigger as the market gets more bearish, that's a sign of more participation by bulls and bears. But that real big daily move right there, 5 minutes, whatever it is, that's totally tradable. And what I'm seeing now with options is what some guys are doing is this real short-term stuff. Like, and when I sell options, I'm going to sell them 3 days out, 10 days out, maybe 30 days out. But right now on the buy side of options, it's like even overnight is great. It's just a much shorter time frame. It's happening intraday, like Roger says, and Norman. But the overnight stuff, when you got huge price elasticity in stocks, that sets you up for some really good overnight buying an option one day, selling it the next day. That's really good. And also for me, when volatility increases, it pushes the price of options up, and it just means I'm going to make more money for the option I'm going to sell than I would if the market was less volatile. So yeah, I love that chart. And there's always an opportunity. That's why I tell people, even if this market is quote unquote no good or it stinks or whatever, there's always an angle. And as traders, that's our job. Figure out, how do you shift? How do you move? And I think some of this overnight stuff could be really great right now, in addition to taking premium, which is my main thing.
All right, great. Well, I'm getting word that my internet is bad. So, Jack, I want to hear about the strategy you've been talking with Lance about. And this is a great opportunity. It's a quick trade. What are your thoughts about those shorter term option trades?
Yeah. Well, first of all, Lance is the man. I wouldn't, there's only a few guys I would take any information from: Roger, Norman, Lance, Tom, and Jeffrey Turnmeyer. That's about it. But this all goes back to Lance's talent and ability to see things other people don't see. And as you probably know, He's incorporating a lot of technology with what he does, scanners and things like that. But his ability to see options, like I say, everybody sees something different in a chart, and everybody sees something different in an options chain. And it's like his whole thing, the whole fabric of his being is about these options and shorter term moves. And so it's a great strategy if you have the right tools, which he does. I don't know too many. Roger's got unbelievable intraday day trading tools, right? That we just saw that. That's unbelievable, But this thing Lance has, I think he's on the forefront worldwide on options buying. Just the way he comes up with this technology. The last thing he showed me, where you got these guys buying options at the same time and they don't even realize it, some of these sweeps and things like that, that's just absolute brilliance. And so he's kind of changed that now, because we're seeing some big pops a day after something happens. So, for him to be able to get in, and he's on the buy side, that's not my thing, but he'll buy puts and calls and on the right stocks and have a definite setup based on his technology to sell it the next day. That's good stuff. Like Roger was talking earlier, why would a guy buy an option with 4 weeks out before expiration? That's just insane. Yeah. But buying one that you're going to sell tomorrow, even if it has a longer expiration, that's pure brilliance. So, these guys that I get to work with, they're very smart, and I love what they all do. But this little thing Lance is doing is extremely sharp.
Mm-hmm.
Very nice. Well, and everybody will get the opportunity today at 1:00 to listen in on that entire event. And I believe Adam will post a link there in the chat, so everybody will be able to get there. While we're preparing for that event, tell us, everybody that's listening, if you can hear me, type in some things that you want to know from these traders right now, like about, trading plans, or being disciplined, or what types of strategies, or what are the first steps a trader should take in preparing for the day. What are some things that you would like to know about? And then while you type those in, okay, great. Thanks, Gary. Roger, what other strategies, and Norman, what other strategies besides the ones we've mentioned today do you think are good for this last quarter of 2023?
Who do you want to hear from first?
Go ahead, Roger.
Okay. So I think right now the best thing to do right now is to, first of all, reduce your position quite a lot. Be very, very careful if you're buying out of the money options, because implied volatility is big, and most people like to buy lottery tickets, which equals out of the money options. You want to sell out of the money options. You don't want to buy out of the money options. You want to buy in the money options, because they'll give you a lot better holding power, and they'll actually be a lot cheaper than out of the money options. Not too, you don't have to go 30 strike prices in the money, but a little bit in the money, because implied volatility is calculated on options based on the intrinsic value, on not intrinsic value, on time value. So if you have an option that has mostly intrinsic value, it's not going to be, your implied volatility is not going to be very high, which is why people like Jack don't sell in the money options. They sell out of the money options. So that's the first thing I would do. I would be very, very careful, and I would reduce your position size because volatility is very high right now. Number two, I want to make sure you guys are hedged. A lot of folks only have one side exposure. That's not very smart in this market. You want to have exposure going long and short. You want to have some positions. My suggestion would be to buy the strongest ETF sector and sell the weakest one. That would be a good thing to go, a good way to go. But generally speaking, I think the best thing traders can do, which is most traders are not doing right now, is I think the best thing to do is not be so anticipatory in the market and be more reactive to what's happening. I have a lot of folks who say, well, it's going to do this and this and this, and then they start making decisions and making their plans based on what may happen. And I call that the hypothetical that never comes true. What you want to do is you want to react on what's happening to the market, or base your analysis based on very specific things like price levels, The 8-day EMA, as Norm mentioned, it's a great indicator. I use the 3-day EMA, 8-day EMA cross in day trading. I also use the 8-day EMA for swing trading on daily charts. And I like to see price charts above the 8-day EMA. That's very important. Don't right now look for strong pullbacks, because those pullbacks can have legs the other way. Look for momentum and directional trades and go with the trend. You don't want to be a bottom picker right now. The worst
Roger,
thing you could be doing
can
right
I jump in? Roger, you seem to be talking about you seem to you talk about the low, a negative move getting more negativity. A positive, very positive begets more positivity. And that's that's really counterintuitive to most traders.
Yes.
First of all,
Yes.
why do you do that? And second of all, how do you know when it's, when a market is exhausted on a side?
That's a great question. Volume legitimizes your momentum moves. If you're going to trade that way, you have to have everything going in your favor. You can't just look for breakouts. If you do, you're going to be 20% right, 30% right. If you do it the way I do it, you're going to be 90% right. I look for everything to line up. So I'm looking for, so number one, I'm not looking, I start off with the daily chart. The daily chart has to look perfect. If the daily chart doesn't look perfect, I'm not going to go. Let me give you an example. Like today I went short Ford. Take a look at a daily chart of Ford. It doesn't look very good. Here, let me just show you real quick. A daily chart of Ford. Just show you. So all my trades, whether I'm going to be in a stock for 3 minutes or I'm going to be in a stock for a year, they all start with the daily chart. So the first thing I want to see is, I want to see the daily chart. Right now, we're looking at Ford. I'm short Ford right now on a 5-minute basis. I've been short Ford since right here. It hasn't gone anywhere. So what is Ford doing? It's not doing any of this. It's right now outside of its range. It's having a big, big move. So the first thing I'm doing is I'm finding stocks that are below the 200-day moving average, below all price levels. I'm looking for real breakdowns that have sustainability. Then I want volume. Volume is a volume right there. Volume. That's telling me this move is legitimate. It's not some BS move like this. I want volume legitimizes price action. If you guys want to write this down and grain it into your brain, volume legitimizes price action. We've been about 90% accurate, and all we've been trading is breakouts and breakdowns in the last month, because I start with the daily. I don't look at some intraday hocus pocus that has random data on it. I look at this when I'm swing trading. The other stock I'm day trading right now is EXAS. Take a look at this chart. Oops. EXAS. Oh, why can't I type today? EXAS. There we go. Take a look at this daily chart. What is this price doing? Does this look like to you like it's in a regular rant? No, it's below the 100-day. It's below the 50. It's breaking down. And it's got volume higher than average right there. This is not moving down. When it's doing this, volume is down. Now it's starting to come up. This is today, so we can't gauge that, obviously. And right now, volume is already 56% of its daily volume, and it's only 1248. So volume is good. So I want to see volume. Then once I'm okay with the daily chart, once I like the daily chart, and I'm okay with holding it as a swing trade, then I move on to the intraday chart. On an intraday chart, I want to make sure the stock has one of the weakest relative strengths to the market on an ATR adjusted basis. So I want to make sure the stock is really weak. It's not just selling off. It's really weak. And then I look for it to break down crucial levels. I like stocks that look like this. What is the market doing today? When the market was doing this, this was just flat. This was it. This was all we saw, because it has relative weakness to the market. The market right now, if this market starts selling off, this thing is going to get weak. It's going to come right through this level. So I look at several different things. I look at the swing trading levels. I look at the major technicals. I look at price action. And most importantly, I look at volume as a confirmation signal. Without a volume, the move is not legitimate. So then, and I don't look at volume like most folks look at volume. I look volume on a relative basis. When you're looking at volume like this, you're only going to see the average. Well, this is great if you're looking at daily, because you could just look at a 50-day line and you could see if it's above or below. But when you're looking intraday, what I'm doing is I'm taking the hourly. So here's what I'm doing, Norm. This is really cool. I'm taking.
Hey, Roger, I hate to
Yes.
interrupt you.
Oh.
I really do. I really hate to
all
interrupt
right.
you. I'm really, really sorry to do that. This is really, really amazing. I know everybody is listening. I mean, you already got it on your calendar to make sure you find out about this on Monday. It's amazing. And I know we've talked about a lot of really great things here today, a lot of great strategies everybody can apply. And I want to hear a little bit more too about, I mean, we've got this other option strategy that everybody gets to hear about at 1:00 today. And I think Lance has joined the room.
Oh, where's
And
Lance? I haven't seen him here.
Lance, are you there?
Hello,
Here he is.
Oh,
hello.
there he is.
There he is.
I am
And
here. How's
Lance,
everyone?
we've been talking about you behind your back and all good things. So amazing things. We can't wait to hear from you today here at 1:00.
Oh, thank you. Thank you. Yes, everyone. I will be with Jack, Mr. Jack Carter, the other Florida man, in about 9 minutes.
Yeah,
So
it's gonna be great. And if you want to see something you haven't seen before, it may even just blow your mind. Just stay tuned for what my nephew has lined up for you, because it's
Yeah, it's a real cool tool that I developed, and it's not like an indicator, it's not like an alert service or anything like that. It's strictly an option scanner for your platform that you can apply. So we'll be going into all full details. I actually had people ask me about it yesterday. I'm in Vegas at a conference, and people were like, "What's the name of your scanner? Like, how do I get it?" And what better way to share it to everyone in the next 9 minutes with Jack. So see everyone there.
What
Jack,
hotel are you in?
Bellagio.
Nice. Beautiful. Beautiful.
Nice.
That's too bad. Yeah.
Good,
Hey, Lance, how you doing? Love the shirt,
good.
man. Come on. You got dressed up for this. It's good.
Only for a nice Friday afternoon with everyone.
That's it.
There you go. Well,
But-
as Bodine says, put me in, coach. That's right. Lance, anytime I watch Lance and I learn his programs and his techniques, I always walk away with a huge amount of value and things that I can apply right away. So I'm excited. Everybody's going to get to see you, Lance. And thanks for spending that time with us, even while you're out of town.
The link is in the chat if you guys want to hop over here in the next few minutes. I'll be with Jack, and it's always a good time, because this is one of the most popular things I've developed, and I know a lot of folks there have it, and we do trainings once a week on it. But if you don't have, check it out here in the next few minutes. Hop over to that link.
Very
Can you give me
cool.
some of that snack. Can you pass it through the window here?
I had to get this orange from the buffet because I cannot get any food around here. You got to walk a mile through the Bellagio just to get a little snack, or pay, $20 for a bottle of water.
Do they still have all those crystals in the top? The glass work? Well,
Actually, very beautiful. They have the little garden area by the coffee shop in the back.
Mhm.
They got like mushrooms, everything they still have when you walk in, all the
there's a name for that, but yeah.
decor and stuff. But I will say this, if you're in Vegas, it is crazy, the strip, because Formula One is
Mhm.
next month. It's all construction with seats and everything. It is a madhouse right now. So just a heads up.
No, I got to ask you, Lance, do you play craps? Because if you do, there's a way to play craps exactly like I trade stocks.
Sell everything?
You play the don't. You play the don't. You play he ain't gonna make the come out roll again,
Wow.
That's that strategy is so good in Vegas that Vegas doesn't even pay you true odds
on it. Well, they don't. I will say Vegas, they don't have any deals on any like the card games or anything. There's no like bonuses, no specials, nothing. I will say I was on a hot run in blackjack last night. I won a couple grand.
Can you find a single deck, or is it still out of 8 out of the shoe?
No, yeah, I don't. No, I haven't seen
Downtown. They
like
used
that.
to have,
Yeah,
downtown.
those days are norm. Those days are gone. I used to live
I won't be
280
able to see
miles
the
away
whole
from
card
Vegas.
when they split that. Okay.
Yeah, now if they have all these gimmick, you have to find. You're lucky if you could even find regular blackjack anymore.
Right.
It's all like gimmick stuff right now.
Yeah, Vegas is a different Las Vegas, not the same Vegas as it was 20 years ago.
Yeah,
No.
that's why I haven't gone back.
Yeah. Yeah. Plus the 3-hour time difference. You know, when you're on the West Coast, it's easy. Now it's like 3 hours time difference. That's a real. It's hard. It's really hard, especially if you're trading. You know, you got the market opens at 6:30 in the morning. I lived 40 years in that time zone. It's not easy. It's very, very difficult. But I used to go to Vegas we used to ditch school at 17 and go to Vegas for the day and then come back, you know, 4-hour drive there and back. Those were some interesting times. That's when they
Especially in
didn't
the
even
winter.
card you, you know?
Especially
That's
in
when
the
they
winter
didn't
when you had the snow.
Yeah, right.
Remember, I think they still put the chains on your tires on the way up. I think so.
They do. When you're going down to down to 10, yeah, they do. You got to do it, otherwise it's because you're going through the mountains. So yeah, that's it's 4-hour drive from LA. If you get a chance, Lance, the coffee shop where they have the flower atrium.
Yep.
Take a look at the floor, the floor there, the tree of life. It's very, very beautiful. It's very, it's custom made, little like half-inch pieces at a time, custom made to put it in there, and they have the whole thing there. It's very, very beautiful. I had my entryway in Beverly Hills. The same people did the same thing there. It's very, very cool.
You are the detail guy, Roger. You notice these piecework on the floor. I just step on it and give me my coffee.
Well, they spend about $15 million doing it. It's very beautiful. It's one of a kind. It's really worth watching. It's very cool. The Tree of Life. It's very, very nice.
All right, guys. Well, a lot of great conversations, and I know Lance and Jack, you need to head over to that other room. So I'm going to leave it up to you to say, hey, see you over there. So
good luck on the class today, guys. Can't wait to see
really
it.
Have fun.
It'll be good.
All right. Thanks, everyone. Have a great weekend, and we'll see y'all next week.
Bye, everyone.
Bye,
Take care, guys. Bye.